Hey everyone. Sorry, it's been a couple weeks since I put out a video. To all my two subscribers, no, I'm grateful that I'm at 110, I think, right now, which is awesome. So hopefully everybody's finding some value in these videos. But I want to jump on. It's been a while because I've been on vacation, but I'm back now and refreshed. I wasn't scared away from the market dropping as it has been. But I did want to get on here and, as the title suggests, this market pullback that we're seeing, correction, whatever you want to call it, to me, it's still pretty minor, but I do think 26 is going to be not so bullish as the past several years have been. Um, but who knows what can happen and what Trump is going to do and what the rest of the world economy is going to do. So we'll see. But again, as the title of this video suggests, this is really very interesting and a great learning experience. The reason I'm doing this experiment with my account, my $30,000 account, or it was 30,000. But the reason I'm doing this is so that I can understand if having a high yielding income portfolio makes sense. So since April of 25, the market has pretty much gone straight up. There was another pullback in, I forget when it was, August, September, something like that. And then since about November, we've kind of been going sideways, some up, some down, but more or less overall sideways. Um, but again, as we're pulling back, especially with Bitcoin and crypto stuff, um, it's interesting to see what these funds are doing. And so, you're not there's not going to be a perma bull market, for the next 30 years. Now, probably over the next 30 years, it will still, keep going up, just as it has for the past, however many years since inception. History shows that, which does it's not guaranteed, but again, uh, the likelihood that it's going to repeat that is, pretty good. But it's nice to see what happens to these high income funds when there is a down market. So we'll take a look at that. So let's dive in here. Disclaimer: I'm not a financial advisor. Everything I say is basically just for educational or entertainment purposes only. It's not advice to be followed. I'm not a financial advisor, so please do seek professional help if you need it with financials. That being said, sorry, I'm getting over a cold or something. So, um, my market, my current portfolio is down 7%, um, which is down $2,000 overall. That includes the dividend, the distribution reinvestment. So really, the market return itself is down 6.6K. Obviously, this is in U.S. dollars. So 7%, that's not great. S&P is still returning 4%. It's doing pretty well. So overall, the return isn't great. But as you can see here, largely that's due to Hood had a horrible last couple of weeks. Same with PLTR, so those are down pretty big. And then a lot of the crypto stuff, down 25%. BTCI is down 36%. Just have not. I don't know. I'm not sure where the turnaround is going to be for crypto, but hopefully it's coming sometime this year yet. So I'm not too worried about it. I don't think it's the death of crypto, in my opinion. So I'm holding on to these. Um, but I sure would love to be a little bit lighter exposure to them. Anyway, if we look up here, SCHD, is doing fantastic, which is why a lot of people love it. Up 16%. Again, these are all since about September of 25. So we're approaching 5 months, almost 6 months of that I've owned all of these and have been kind of reinvesting. Kind of, I have been reinvesting all of the distributions into the same stock that pays it. Yeah, so overall, that's kind of where we're at with the portfolio. This is tracking the weekly performance or the weekly distributions. Again, they're called dividends here. Call them what you want: distributions, dividends. Um, and as you can see here, back in October, things were going well, but the overall trend, which you can see by the trend line, is going down. So as the market continues to pull back, and crypto pulls back, hood, PLTR, even Nvidia, a lot of those have not been doing great recently. The distributions have been going down as well, so you can see that pattern. So it's kind of expected. um, what do I conclude from looking at this? I don't know. I think it's still too early to tell. But obviously, if this trend continues, then I think some of these funds will have to figure out a way to adjust for it. Just like we saw with Ulti, everybody was bailing on that, and then it kind of turned it around and invested in more stable stocks, less volatile, which obviously took away some distribution, but also kind of saved that fund. And I mean, I don't know if it's saved for good. Who knows? Your guess is as good as mine. I don't own any, but I bailed on it too. But um, they kind of structured or re-evaluated how they wanted to run that fund. So we haven't seen any announcements like that. Again, I think it's too early, especially with the funds kind of trending in the same direction as the uh, underlying assets. So yeah, so that's that. Monthly distributions again, kind of down. October was a great month. December was even pretty good. January, even though it has 31 days, for some reason it feel like it's the way that it fell. Um, I don't remember when February 1 was, but it was a little bit lower. And here we are, February. We're halfway through. Distributions are pretty low, and it's again a short month. It's only 4 weeks, so it'll be interesting to see kind of where February falls. I'm probably not going to hit this $900 amount, but you can see here kind of the overall trend is still going down, just as we see here in the weekly. So no surprises there. See if there's any other surprises here. Again, this column here for the last dividend turns red if the last dividend is lower than the average of the last, I think it's three. It'd be under 4 million, but I think it takes the average of the last three dividends. And if it's lower than that, then it shows up red. So if you can see here, it's like a lot of them are green, which says that they're maintaining, or holding pretty close. Let's see, what was I going to point out here? One of these, Tesla. Tesla's pulled back quite a bit, but you can see here the distributions are still going pretty well. We did get earlier in October, we were in the mid 40s, and now the last one was around 35. So it's still providing some income. However, we see here overall, I'm still down 14% on that. Do I think Tesla's going to come back? Probably. So again, I'm not looking to sell that, but it is just interesting to kind of see the overall $30,000 portfolio that I had. What's happening now with the market doing what it's doing? So I don't know. Are we going to see a bigger pullback? Again, who knows? But it's interesting to look to see what everything is doing. If we go over here quick and look at the ETFs, select all those, turn off my filters here. In the past 30 days, if we sort this, we can see ARM is doing pretty well in the last 30 days. Apple, ExxonMobil, Apple seems to be doing all right. Meta, Cost, Berkshire, Facebook. There's only a couple that are positive over the past 30 days. And even overall, if you look back 6 months and a year, though, they're still negative. So again, I use this database here that I created just to kind of get a feel for the market. And if we look at the majority of what's in here, it's all negative from 30 days and 6 months and a year. So we're going to have to see some pretty big pullbacks. We're going to have to see some pretty big recoveries in 26 to get some of these numbers looking better. So apart from a few, stocks, like I said, Apple, Gold, Meta, Cost, it does seem like almost everything is down overall. So again, this isn't doom and gloom. This isn't the end of the world by any means, but it is interesting to see that pattern here. So anyway, hopefully, you have some similar thoughts, and please share them in the comments, ask questions. Let's have a discussion about what's going on. I'd love to hear your thoughts, if this is the new norm for us, or if you're starting to get scared and bailing out of these funds. So let me know. Talk to you later.